It's so easy to use Geico.com, a caveman could do it.
What? Like a good neighbor, StateFarm is there!
Hey, guys.
Are you in good hands?
Wow.
Wow, I know. I say it louder.
The principle behind an insurance transaction is simple. A person pays a small but certain fee, aka a monthly premium, to an insurance company who now takes on an uncertain but costly risk, like the cost of your house if it burns down. If your house does burn down, the company has an obligation to pay you quickly and fairly so that you can move on with your life. The company can afford the cost of your house because it collects monthly premiums from many people. It's a simple promise. You, the policyholder, pay me, the company, and when disaster strikes, you're
In good hands.
But somewhere along the line, that changed, and it got bad enough for, Okay, I'm going to address this now, because if I wait till the end, there's going to be a pretty big elephant in the room, and that is so I'll say it now. I will not be talking about Luigi or healthcare in this video. Now hear me out, I've got a few good reasons. For one, the practices and principles behind modern day insurance are pretty universal across the entire industry. And for that reason, it makes more sense to me to start with something like auto insurance. When it comes to auto, there's usually you, your insurance company, and the accident or collision that caused you two to start a conversation. In healthcare, not only is there a middleman in the form of your doctor, there's also a million more things to look at. Routine visits, surgeries, prescriptions, prior auth, employer subsidies, Medicare, Medicaid.
We got a bill, and then we realized that you guys didn't have our insurance, so we sent you the insurance, and it looks like the bill went up.
It went up?
Yeah.
And I don't want to deal with it right now. The other reason I don't want to talk about that high-profile case, I'm scared. Not only have I heard about UHC hiring lawyers to go after people criticizing the company, I also saw recently that a big YouTuber put out a video about him and then promptly took it down. It looks like there's too much heat on the topic as of right now. But I'm not one to back away from honest reporting. So if you want to see a breakdown of American health insurance and how we got to this, dare I say, dystopian system, like this video, share it, leave a comment. Now on to today's topic. Today we're going to focus on auto and home insurance, and we're going to take a lot from the book Delay, Deny, Defend, a book that inspired the engravings on the bullets that took out the UHC executive, a book that details the corruption behind insurance companies and how they delay payment, deny payment, and if those two don't work, defend their position in court. Let's break it down.
To me, a claims man is a surgeon. That desk is an operating table, and those pencils are scalpels and bone chisels.
Believe it or not, working in insurance used to be cool.
And those papers are not just forms and statistics and claims for compensation. They're alive. They're packed with drama.
That was a bit from the 1944 film Double Indemnity, where two star-crossed lovers commit insurance fraud by passing a murder off as a suicide. And Edward G. Robinson's character, the claims adjuster slash self-proclaimed surgeon, smelled something afoot.
A guy takes out an accident policy that's worth $100,000 if he's killed on the train. And 2 weeks later, he is killed on the train. They've committed a murder. They're stuck with each other, and they've got to ride all the way to the end of the line. It's a one-way trip, and the last stop is the cemetery.
Wow. This guy's cool as shit. Back in the 40s, if you needed money from your insurance company, you'd fill out a claim, and your claims adjuster made it their mission to work with you, calculate a fair value, and reimburse you on time. 60 years later, in 2004, we see a modern-day claims adjuster in a very different light.
Denied? You're denying my claim? Oh, I don't understand. I have full coverage.
I'm sorry, Mrs. Hoganson.
I didn't pay for this.
Excuse me. Claims, Bob Parr.
How could Mr. Incredible deny that woman when she had full coverage? Well, it's all thanks to these guys.
Absolutely. That's a very alluring, enthralling, riveting question you're asking there.
If you've worked in the corporate world, you no doubt have heard of McKinsey. They are the largest and oldest management consulting firm in the world. They advise big companies and even the government on how to solve complex problems.
What we're recommending is finding significant efficiencies by laying off the people at the bottom of the company and paying more to the people at the top.
Hey, That's me!
Honestly, I could make an entire video on McKinsey, but I don't need to make such a video, because John Oliver and his team already did. You can watch their episode on McKinsey right here on YouTube. But make sure to come back to this video, okay? Because John doesn't talk about McKinsey's work with the insurance companies. Which brings me to Allstate.
Are you in good hands?
In the 90s, McKinsey came in and expertly deduced that claims are responsible for most of an insurance company's losses. That's right, the less Allstate paid out in claims, the more money it could keep to itself.
And also,
The goal that McKinsey set in motion was to not only pay as little as possible for claims, but to also just deny as many claims as possible. Because why pay a minuscule amount to someone who suffered a loss when you can pay them nothing at all?
We're supposed to help people.
We're supposed to help our people! Starting with our stockholders, Bob!
Now, how did they get away with this? That sounds illegal. And yes, you can find many lawsuits throughout the years online, but the problem is that's what they want. Companies like Allstate know that most people will not go through all the hassle and costs of hiring a lawyer and going through all the legal processes. Litigation can take years, as we'll see later. They know most people would just settle for a lowball offer. And if you do decide to sue, they have entire legal departments ready for battle. And that's where the defend of delay, deny, defend comes from. But first, back to McKinsey. McKinsey helped Allstate transform the claims adjustment process into an automated behemoth. They called it the Claims Core Process Redesign, or CCPR. An Allstate claims adjuster would take a claim, enter all the relevant information into a computer, and the computer would calculate how much that claim should be worth. The software was called Colossus, made by a company called Computer Sciences Corporation. And what an apt name for a program that would stifle such a huge part of the industry. Claims processing. Claims adjusters were reduced from people who could freely analyze and judge these situations to glorified data entry clerks. Let's take a look at our first legal case of the day. This one was brought against Farmers Insurance. Side note, I know Farmers is not Allstate, but they used Colossus too. It was everywhere. It's just that Allstate was ground zero. In this litigation, former Farmers Insurance claims adjusters sued for unpaid overtime in a class action lawsuit worth $120 million. Farmers stated that the claims adjusters were not owed overtime because their duties were restricted to the quote-unquote routine and unimportant, and thus they were exempt from the overtime pay regulations. Routine and unimportant? You mean claims processing? That is your one job as an insurance company, and the court would agree. Clearly, insurance companies would rather lose in court than pay their employees. They're very comfortable in court, as we'll see. As Colossus spread across the industry, insurance executives realized they now had a plausible reason to ignore the opinions of claims adjusters and rely on Colossus as the single source of truth for claims payouts. And since Colossus could be tuned however they wanted, they decided to lower claims payouts across the board. Because of course they did. Here's a juicy lawsuit. Two former Farmers Insurance claims adjusters, Robert Dietz and Christy Klein, were sued by Farmers because they quit and then started acting as expert witnesses in lawsuits against insurance companies. What were they experts in? Colossus. They were helping lawyers better understand the system, and Farmers was so scared they sued, despite Dietz and Klein never having signed any NDAs. According to Dietz, back when he worked for Farmers, he and about 30 other senior claims adjusters were asked to help tune Colossus and benchmark values for claims payouts. Basically, how much do we pay for a broken leg versus a broken neck? Once Farmers got all the estimated values from Dietz and his colleagues, they lowered the values by 20% before inputting them into Colossus. Why? Why not? They know you're going to take the money. Most people who have insurance, like you and me, do not know the fair prices for payouts. And even if you did, you have to consider, is it worth it? Paying an attorney, going through court and all the legal processes for maybe years, knowing that, one, you may not even win, and two, if you do win, your payout might not even cover your attorney fees and everything else, unless you were seriously injured. To quote Dietz, more often than not, these values were not representative of what I had experienced as fair and reasonable. As such, it became difficult to settle claims, and it was at times embarrassing to even make the offer that Colossus recommended, knowing it would be rejected and suit would be filed. Here we see a man desperately fighting against the system that is literally rigged. A man who probably felt firsthand the transition from a Eugene Robinson to a Bob Parr. And although he may have won the battle, ultimately he and many others could not win the fight for us, the people. Before we move on from this case, there's one detail I didn't touch on that paints even more of the picture. I told you this one was juicy. You might be wondering, why would farmers sue Dietz and Klein for shedding light on Colossus when they never signed any NDAs? Well, it's because when you sue someone, you can ask the court to issue what is known as a gag order. The court will prohibit the parties in the lawsuit from discussing the contents of the case. So, Dietz and Klein help lawyers understand Colossus. Farmers sues them, claiming they're not allowed to talk about Colossus, just so they can ask for the gag order. I'm basically a paralegal at this point. I've been burning through tons and tons of litigation. You ever read court cases? Page turners, they are not. And I'm doing all of this for you. You should probably subscribe. Let's take a breath. We're nearly finished. Now, I've brought up The Incredibles a couple of times by now, and if you've seen the movie, you know that Mr. Incredible actually does help this woman.
All right, listen closely. I'd like to help you, but I can't. I'd like to tell you to take a copy of your policy to Norma Wilcox, W-I-L-C-O-X, on the 3rd floor, but I can't.
By the way, I just noticed this. Look at the huge concrete pillar that takes up half his cubicle with an electrical box on it. Wow, this movie really drove the point home. And it brings up the question, how realistic was this? Were claims adjusters really that scared to help customers? And the answer is yes. Yeah, there's no happy ending today, guys, sorry. Remember the Colossus value that was lowered by 20% for no reason? The expectation was that claims adjusters pay that amount and no more. It was made very clear that their pay and promotion opportunities were directly tied to how they resolved claims payouts. Unum Insurance gave out what they called the Hungry Vulture Award to employees who... I mean, you can guess which employees received that award. By the way, Unum Insurance, in a class action settlement reached in 2004, was fined $676 million after reviewing claims denied from 1997 and realizing they underpaid on all of them.
Nice.
Now, I've been talking a lot at you, but I still haven't really covered the delay and deny part of delay, deny, defend. And to be honest, I've barely covered defend. After all, the 2 lawsuits that we covered so far involved claims adjusters pitted against their insurance companies. But what about the policyholder? You know, the average Joe. Well, luckily all 3 of those tactics are covered very easily by reviewing, you guessed it, litigation. And there are many such cases. Trust me. So we're just gonna run through some highlights. Let's go. Kim Zilisch was an Arizona woman permanently injured in a car accident. She filed a claim, and in response, StateFarm sent 2 claims adjusters with no medical background to examine her injuries to make sure she wasn't lying, and got the opinion of 2 other doctors besides the ones that Kim saw herself. And after all that, they lowballed her with an offer. Kim declined, and so they offered her the same exact value again? What the fuck? She declined again, and they finally paid her after a jury sided with Kim, 2 years after she first filed. Then there's Thomas Anderson.
Mr. Anderson.
Who filed a claim with Allstate after his house was damaged by a burst pipe. Allstate's claims adjuster thought that Mr. Anderson's claim was suspicious because there was too little furniture in the house. Allstate wanted to claim that Mr. Anderson wasn't occupying the house and therefore didn't have the heat on, which led to the pipe freezing and bursting. And if that was true, they could deny the payment. However, they never officially investigated and delayed the case so long that Anderson couldn't occupy the house if he tried due to mold. Anderson would sue and win 5 years later. And finally, we have Leandra Pitta, who was injured in an accident in Atlanta and suffered a massive brain injury. She filed a claim with Progressive, and they were so hell-bent on proving that Leandra was faking that they hired 2 private investigators to pose as a married couple so they could join Leandra's church and attend support sessions for church members in the basement while recording them. What the flip? Progressive eventually paid Leandra, but this one was so bad that news got out to the public and Progressive was forced to make a public apology. And there you have it. We see that insurance companies delay payment by double and triple checking your medical claims, usually with experts that they handpick themselves who have a record of siding with the insurance company. They will send investigators to your home or to your church for extended periods of time to delay payment, but also to look for reasons to deny payment. And finally, if you do decide to sue, they say fine. Lawyer up, bitch. And who suffers the most during these escapades? Not the insurance company. It's people like Kim and Mr. Anderson who have to live through their injuries or house disasters while getting jerked around by insurance companies who promise to be good neighbors. So that's it. That's how we got here. The McKinsey-led CCPR movement at Allstate would manifest itself across the industry. And while the lawsuits I talked about ended up with big payouts for the policyholders, they didn't really do much in the long run. Will that change given what's happened recently? We'll see. All right, I'll see you next time. Oh wait, I said I was going to talk about home insurance. I kind of don't want to do that because it's all the same stuff. Their version of Colossus was called Xactimate, and a lot of the companies that do auto also do home. So it's going to sound kind of samey, but okay. Luckily for us, we only need to cover one natural disaster to see the trash that is the home insurance industry. Can you guess which one?
The destruction of the spirit of the people of southern Louisiana and Mississippi may end up being the most tragic loss of all.
George Bush doesn't care about black people.
2005's Hurricane Katrina is the costliest natural disaster in American history, costing around $160 billion. New Orleans itself was almost wiped off the map. Claims in the hundreds of thousands, lawsuits in the tens of thousands, so much so that insurance companies tried to shift their losses to the federal government's NFIP, the National Flood Insurance Program. Why? Because insurance companies do not cover water damages in most of their home insurance policies. If they could argue that Katrina's damage to your home was due to flooding, they could deny your claim. Now this gets tricky. Yes, during Katrina there was a ton of flooding, but a hurricane is a storm born from wind and rain. Winds as fast as 140 miles per hour demolished the infrastructure across the Gulf Coast. But how are you, an average Joe, gonna argue to your insurance company which damages were from water and which from wind? Not to worry, the insurance company's got your back, right? Now, companies like StateFarm did call in property experts to come in and assess homeowner situations. But it was discovered that those property experts, such as one Hog Engineering, had a history of being contracted mostly by insurance companies. Can you guess why?
Why are you the way that you are?
This led to tons of denied claims and naturally even more lawsuits. In fact, insurance companies were so hell-bent on blaming all damages on water that they used the policy known as the Anti-Concurrent Causation Clause, which said that wind damage is not covered if the damage occurs at the same time that damage is being caused by water. So if wind and water are joining forces in wrecking your home, like in every hurricane ever, you're, as the kids say, cooked. Katrina was so powerful that some houses were completely wiped. Everything except the concrete slab foundation. These were called slab cases. And do you think these were covered?
No way. Not this time. Not a chance.
These were so hilariously denied that a blog called Slabbed was set up to follow the news and big legal cases out of Katrina. All right, let's wrap. Today, the insurance industry is colossal. Auto and home are worth $500 billion combined. Health insurance, $1.5 trillion. In the past couple of months, we've definitely seen more public scrutiny against insurance. People protesting, sharing their stories online. So I thought I'd make this video just to spread awareness. I hope you appreciate that. I certainly appreciate you for watching and getting this far. If you like this kind of content and want to see more on insurance, like this video. Anyway, thanks for watching. I'll see you next time. Bye.